Okay. Now that folks are joining us for our Money Transmission Masterclass, I'm delighted to hop in and have this conversation with Snigdha. We're going to cover all kinds of good things. First, let me just start with housekeeping, which is to say we're going to have a long session for Q&A at the end. So please ask your questions along the way. And if we can't get to your Q&A, you can also ask either Snigdha or I over email after we send that out. Okay, so let's do it. Snigdha, nice to see you. I'm Rachel. I'm the COO of Modern Treasury. Modern Treasury is a payment operations software platform, and we help companies manage the movement of money, moving the money itself, tracking it, reconciling it, running all the workflow around money movement inside a company, which can be a very complicated set of processes and is highly complementary to what it takes to undergo the MTL process. So Snigdha, can you just give us a quick overview? We're going to go really in depth on all these things over more time, but just give us a brief overview and welcome.
Yeah, thank you. Thanks for having me. I'm Snigdha. As Rachel mentioned, I'm the CEO of Brico. And at Brico, we are helping companies get licensed so they can move money, store money, or transmit money between people or businesses. So yeah, a little bit of my background. I've always been in fintech. So I've seen some of these very detailed money movement activities, which can take ages to get set up. So very excited to kind of partner with Modern Treasury so we can help people not just get licensed, but also kind of maintain the entire workflow of payment operations.
Yeah, there's a lot that goes on behind the scenes to pursue these opportunities, but there's also a lot of gold at the end of the rainbow by going through this stuff. So maybe I'll start just with a open-ended question of there's an alphabet soup between fintech and payments and the regulatory environment of MTLs. It is like hard to follow what is what. Mm-hmm. So my first question is to start at the basics, start at the 101. What is an MSB versus an MTL? What is AML, SARS? Just give us the lay of the land of what we're even talking about for the rest of that masterclass.
Yep. Yep. In fact, like a quick quip, when I worked in like 7 different countries before I came to the US. And when I was here doing my master's at Harvard, I had like maybe like 12 different acronyms when I started like fintech regulation class. I'm like, wait, why are there so many different acronyms going on here? There's like AML, SARS, FinCEN, CFPB, CFTC, FTC. I'm like,
it's unbelievable.
Yes, it's crazy. But for the purpose of this conversation, I think we'll focus on the stuff that is more relevant for money movement. So let's start with some of the stuff that you mentioned, like MSB. So MSB at the highest level, before you're even like thinking of getting your MTL licenses, you need to be registered as an MSB with the federal FinCEN regulator. Okay. And that all that is doing is kind of putting you in a registry of a company that will potentially move money and then will come under the radar of anti-money laundering laws as well as Bank Secrecy Act. So that's your AMA, AML, and BSA acronyms covered. And then once you figured all of those things out, you're registered. It's a fairly simple process. Then the hard work begins is in the US, if you need to move money, you need to be registered in all 50 states. And in order to get kind of your licenses in all 50 states, you need to become a money transmission business that is getting a money transmission license across all 50 states.
And money transmission license is MTL, which is, I'm sure, something we're going to say repeatedly throughout the rest of the hour. Can you explain a little bit about what's included and what's not? So being a processor of payments or holding value or helping users or businesses move money in certain ways counts as money transmission, and in other ways it doesn't. And I think that's worth clarifying, what's in and what's out.
Exactly. So let's talk about what's in, right? So money movement between businesses and people is in. So an example would be like a Venmo or a PayPal, like it also applies to B2B payments. The other categories facilitating payments for goods and services. So, marketplaces like Airbnb that collect money from buyers, pay out sellers, that's also included in who needs an MTL. Third category is companies that offer stored value or digital wallets. So, prepaid cards, mobile wallets, crypto wallets, all of that actually go into that whole category of digital wallets and stored value. And then similarly, like related to that, companies that are transmitting crypto, even stable coins, will require MTLs. And then finally, like anyone that's offering bill payments, disbursements, so like a bill.com, they'll kind of also need MTLs. Who doesn't need an MTL is obviously if you're a bank or a credit union, you do not need a license because you're already kind of chartered to operate with it. If you are an agent of an MTL, so you're already working with a licensed provider like a Western Union and you're just doing things on their behalf, you don't need to be licensed. And if you're like a vendor making payments on behalf of your like customers and just within a small scope and you don't control the funds, then also you don't need an MTL.
Yeah, I think the last point is the one that's, it's how we think about it a lot inside Modern Treasury. If you're running your own business, we call it first party, but that's just our, quick hand language for it. If you're running your own business and paying your vendors, you're making a bicycle and you're paying your wheel vendor in Nevada, that's not money transmission, that's paying for goods and services. However, if you're a bicycle marketplace connecting rare used bicycles with people who care about rare used bicycles, and you're transmitting money on behalf of other interactions or holding that value, that's where you get into the level of complication, not only in terms of infrastructure and workflow inside your company, but also the licensing and regulatory environment, which are sort of the two sides that we come at from our two parts. All right, so I want to break this into two parts based on not only some questions I got beforehand from the audience, but also just, I think, making it easier to follow. The first part is about becoming a money transmitter. What does it take to go through this process from scratch? How should folks in the audience who are thinking about entering these opportunities to make money and move money for their customers, I want to go really in depth with you on what that process is like, and then we'll talk a little bit about some of the motivators and things to consider. And then in the second part before Q&A, we'll talk about maintenance and scale. So once you've gone through this process and you're operating, and I know there's folks in the audience who are operating at significant scale in an MTL regime, what does it take to maintain? How do you think about efficiency in operations and reporting? So we'll break it into two parts. So let's start with the first part. Just walk us through the basics. What are the requirements to get the multi-state licenses for your MTLs? What is needed? Maybe we can talk about it in two parts. What is needed from a capital perspective, and how should you think about it in terms of time and human capital investment?
Yeah, I actually break it down into maybe four parts. So there is human time, but then there's also all the other things that you need to have in place before you can even apply. So the big other category is compliance policies and procedures internally. Because as we had already mentioned, anti-money laundering / AML is a core part of moving money. So you need to have, before you even get started, you need to have a clear-cut plan of how are you going to be implementing your AML policy. Because remember, you've already now registered as an MSB and you're already under the purview of FinCEN to do all of those things correctly. Right. So the first thing is your compliance policies. That needs to be like very much up to date, and you should know how you'll be implementing it, even if right now you've not started operations, but you should have a plan for it. The second category is around having all the information about who is going to be on the company's board, who is going to be kind of control person / key person, and all their information. Like you even have to get fingerprinted and like, go into the details of your personal financial statements. So that's like another big category of your key person, control person, who is going to be on that set of people, executive list, and their information. Then we can talk about some of the money related items. So you definitely need to have between like, $1 million to 4 million on your balance sheet to prove net worth. Now that's where like the unique thing comes in. Like unlike other countries where you might have to put in collateral in order to get licensed, in the US, you just need to show a positive net worth balance of the amount of money that the states require, and in other vendors like surety bond providers require. And now that we've touched surety bond, like you also need surety bonds, which is part of like, connected to your financials. It's like a insurance that you buy in case something goes wrong with the company and you're not able to meet customer obligation. The surety bond providers cover that part of like the risk. So you're buying insurance and paying a premium. And which kind of also leads to the point that you need to have financials because people are underwriting you and you need to show that you have positive net worth requirement. You can always get started with unaudited financials because there's some states and some places that you can get started. But if you're doing all 50 states, you definitely need to have audited financials. And that kind of requires, it's like a big undertaking. So people need to like be thinking about it from the beginning of the overall process. And from a time and resource commitment, it depends on who you work with and how you plan it out, right? I mean, there are options. There are options. You do it in-house. If you do it in-house, it's probably going to take like three people to figure everything out, one POC, couple of other people managing the process, and it will likely take you like a year or two to even like get through 20, 30 licenses. The other option is you work with like a law firm or a consulting firm. They'll charge you like millions of dollars to do this entire process, and you still will be doing like 50% of the work. And then third option is you work with a company like Brico, where through software and automation, we can accelerate the speed at which you can apply for licenses, and then also kind of help you manage the whole regulatory process as and when regulator questions and deficiency comes in at 1/10 of the cost. So you have options, but that's how your time commitment looks like. It can be anywhere between 6 months to like 2 years.
Right. So it's something you go into very deliberately with a lot of thought and planning. And once we are going into that opportunity, there's all these different paths you could choose about why you would go this way versus the other, and then maintain it from there. Can you just touch on one thing that I think is true underneath everything that you said, but you didn't talk about specifically, is documentation? A lot of these things need to be specifically documented, right? The internal policies and processes.
Yep, exactly. Like it has to be like, these are documents that you have to upload, and you will be questioned on these documents. For some states, you might even have like a pre-file meeting, like California, New York, and they'll really test your knowledge of how much do you know what's in your policy. And the CEOs get tested also. It's not just the compliance person.
Yes.
So you really need to know what's in the policies. It's like a evidence that you're providing to the state regulator that this is what you'll be doing. So it's really formal and got to be like pretty tight in terms of what you're doing.
Okay. So you described a lot of different things that a company has to undertake and the different paths to get there. I guess one question I would ask, like if I were in the audience thinking about or in a process of measuring whether this was right for my company or not, it would be helpful for me to know from someone like you who's helped shepherd so many companies through this, and before Brico, done it yourself. What is the unknown? Like, what's the common misconception or the thing that comes up that most people entering this process don't see ahead of time?
I think for a lot of people who are doing this for the first time, the biggest misconception is that, oh, these are just policies that I'm writing, like, AML policies, internal money movement policies, and I don't have to stick to them because, well, I'm just submitting it, which is like biggest misconception that we have to keep telling people about is like, hey, you have to implement these because you are going to get audited by the state and they're going to check word to word of what you've said you're going to do and what you're really doing. So that's like the first big misconception. Like it's not just for writing and documenting and having it like pretty formatted in your policy document page. It's really for you to implement. And I would say the second thing that also is a little bit nuanced, but when you do talk about the business model that you want to go live with, you should be focused on what you're going to be ready to go live with within 6 months to 1 year of you getting the license. It's not set in stone that you cannot change it. So let's say if you suddenly decided that you are going to be a P2P, a person-to-person money transmitter, and at that point, you didn't know that you were also going to move money between business, it's fine. You can change that later. But if you apply for the license for both the person-to-person transmission and business-to-business transmission, and you do not do either of those two things within the first year, then states will have some amount of question. It's like, wait, why are you not doing that?
Yeah. Okay. So you got to have a plan. I mean, you really have to have a plan in place, and you can adjust and append over time, but you have to stick to it, especially within the first year. Okay.
Yeah.
I'm not sure I would know that, but would have known that before getting to know you.
No, that's great. And I'm particularly interested, like I'm actually very curious to know, Rachel, from you, like, what do you see at Modern Treasury as some of the key motivators for businesses and customers that you work with? Like, when do they actually start deciding to handle payments and obtain MTLs themselves? And when do these goals typically come up?
Yeah, I think it's different in the different stages. So maybe I'll answer this question both ways, even though we're only in the first part. For folks considering stepping into money movement or adding money movement experiences to their product from scratch. So this part of the masterclass we're talking about now, like I'm looking down the field at MTLs and everything it could offer. Why am I motivated? I mean, there's a lot of reasons. The most important is providing incredible and delightful customer experiences. But that customer experience, what really motivates the company is making money on that. And either you can charge for that experience, or that because you're in the flow of funds, you can make money on the money that you're moving around. There's a large revenue opportunity in providing incredible payment experiences inside the rest of your ecosystem that you're already offering. So I mean, that's the main carrot, is like, go provide incredible things to your customer base and make money on that and grow on that, expand the opportunity that's in front of you, expand the relationship you have with your customers already. That could be in a consumer environment. I mean, think about so many companies that have been built in Silicon Valley recently where payment is critical to the amazing customer experience we now have. It could also be true in a B2C or B2B environment where the business side has an elevated experience because you embed the money movement and the payment flow. So it's like owning your experience end to end. And then on the backs of owning that experience end to end, the unit economics are better and there's revenue opportunities in and of itself for the business. So making money on the money that's moving around. So that's more of the second half. Once you're at scale and operating with scale and thinking about efficiency, owning that stack and stepping into it means increasing margin or increasing revenue opportunity on the money itself. So those are some of the reasons we see why companies consider this. The real motivation is customer experience at the beginning, and then these other additional things follow from that. And I think overall, the reason we're seeing this, all of this embedded payments experience, is because great experiences have been put out there in the last 10 to 15 years. And now lots of other industries and companies want to mimic that and provide that in their part of the market, which is wonderful. I mean, that's only additive for us as consumers and businesses. Sorry, go ahead.
No, I mean, I was just saying that this is very aligned with what we also hear. Is like people wanting to own their destiny, which means owning their product stack, owning all the unit economic stuff that you talked about, increasing margins. So yeah, very, very aligned with what we also see as key motivators.
Yeah, so these are like the big motivations when you're setting out. Okay, I'm going to go into the maintenance and scaling, like the operational half of my questioning in a second, but I want to go into one question that I've already heard from the audience, which is, there are some places where you can have an exemption to going through this process. So if you're at the beginning looking at a consideration, and this is not legal advice, but just roughly, Snigdha, how would you advise a friend, like in places that it's not required to go through this process and you can have an exemption?
Yeah, and I think the best way is like getting a no action letter from the state. So like explaining what the business model is and kind of getting the state to give you a formal, you don't need this license kind of a document. And you can easily kind of apply for that by writing a little blurb and like reaching out to the state regulator and just like getting that formal. There are also you can also talk to your legal counsel, and this is because this is legal. Yes, this is legal advice. So you should talk to your legal counsel about it, because they might even know, based on business models, you may not need licenses in those states, even without getting a no action letter. So you can even have like a legal strategy that's given to you by your outside counsel, in addition to the no action letter, as like a implementation step.
Yeah. Okay. So there's steps you can take ahead of time while you're in this planning, making choices stage. Okay. Let's move, as promised, to the second sort of phase of this for the audience, which is, once you're operating at scale, how do you maintain, operationalize, and make efficient managing the MTL licensing requirements? So maybe I'll just open with a very open question, which is like, what does it take? What is business as usual standard practice for maintaining your MTLs right now?
Yeah, and I think that's a very important question, because a lot of people get hung up in like, oh God, like I have to get my licenses, and people are just like worried about the first phase. But it's even more important for you to know what you need to do after you have the license, because now
Yeah.
you are under the regulators, like, scrutiny, because you've already like submitted all these things. So you have to be very, very on top of all the requirements that is required to maintain your licenses. And broadly, I'll break it into like three parts. So you have quarterly requirements and obligations, you have annual reporting and renewal, and then finally you have ad hoc stuff that you need to submit based on if the regulator is asking you questions. So on the quarterly side of maintenance, things that you need to provide every 3 months is financials. I mean, because it's quarterly, it doesn't have to be audited. It can be like whatever the point in time your financials are, you need to provide that. The second part is transactions. So you are, as a money transmission company, moving money. You need to provide the state with an overview of how much volume you have moved, which states you have moved the money to, have you moved money outside of the country. Like all of those details have to be provided to the state government at a quarterly basis. Then there are these annual related items that you have to do. Annual reporting is just overall, like how did the year go and things like that. But then
Right.
also your financials, if it's needed by that state. Some different states have different requirements on financials, whether you need it at annual or quarterly only. And then from there, you need to up or down your surety bond coverage. So if
Okay.
you have that surety bond that you bought as an insurance, if your transactions has increased a lot more than what you have been underwritten for, you will need to up the surety bond. If the transactions have reduced, you need to reduce the amount, or like keep it same, but at a minimum, you need to renew it at an
Yeah.
annual basis. So those things happen. You need to pay an annual fee. You need to like make sure everything looks kosher for like the renewals, because some states have specific requirements around reporting for annual renewals. So that's like your annual stuff. And then there are ad hoc things. Like state will send you an email. Like Missouri would like in the past send emails about your transactions in an email that you need to like provide for up to a certain date. And these dates can be different. Like one year it is 30th of March. The other day is like 30th of June, and you need to be able to like provide these ad hoc requirements as and when it comes. And that's kind of also what you need to keep track of, because some of these things will change over a period of time.
Okay. So there's different reports required at different cadences, and then you also have to be prepared, not at any moment, but kind of at any moment for inbound and ad hoc. Okay. That's a lot. In addition to what you're maintaining inside the organization to do this work. I think the second thing that at least was a surprise to me as I was getting to know this space and getting to know you is that the regulatory environment is also quite fluid and dynamic. And so I would love to hear from you on the front lines. How often do state requirements change? And in addition to the reporting on the different cadences that you just talked about, how do the best companies in the world that are maintaining their NTLs think about staying on top of the changing regulatory environment? I mean, oh my
Yeah.
gosh.
Yeah. And that's kind of like a big pain point for people right now, because it's not done on a fixed cadence. It's not that 15th of March, new requirements are coming up, so I need to be prepared and go to
Right.
this website for it. It's kind of scattered, and any state can have its change anytime on any of the state websites. So like, for example, last year, Missouri went through a big change from like 5-page law. It went on to like, I think 40 plus at this point. And it was just there, like on like their website, and people were preparing for it. So if you just like, from a framework perspective, if you think about how quickly things change, you have to think about, well, is there going to be like a new framework for regulating a new kind of payment? If that's happening, then things will be very fluid for a long period of time. So an example of that is crypto. A lot
Right.
of things are kind of going through their own kind of, well, do we regulate it? Do we not regulate it? How do we regulate it? Is it a MTL? Is it a separate crypto license? Is it like a totally different category that I need to think about? So that is a very fluid environment. So when like a payment framework is changing, it's the laws and regulations are changing very, very frequently. Other cadences is like state is going through something. So, for example, Massachusetts last year was like, why are we not regulating MTLs the way other states are regulating? And then the state had like a certain vision, and then they were like, I need to make this change, and the change out. So it's very ad hoc, but there's some pointers that one needs to be aware of is if there's like a big payment infrastructure framework like being discussed at the federal level, then most likely states are also discussing it. And then also if the state priorities are changing, or if there's been like a big catastrophe in the state because of some form of like companies going bankrupt, that also will lead to changes overall. But there's really no way to predict when it happens. And that's what makes it hard is you constantly need to be looking on all the state regulator website, talking to the regulators, and then kind of waiting for anything that is getting published and making sure it's not in conflict with what was earlier and like what you need to do. And the second part of the question that you mentioned was, well, how do people do this right now?
Yeah, like that sounds like a lot. So what are the different options to actually do that?
Yeah. So obviously the common option is like you can do it internally. In like previous companies, I've like, we've had teams of 2 or 3 people whose whole job is to go on state websites every day and look if something has changed. So that's obviously a very time intensive as well as manual, as well as resource intensive way of like keeping track of regulatory change management. So that's one way. The other is you can like, work with law firms, similar like consulting firm, they'll tell you what is changing also. And you can also use like, emails coming from state regulators as a proxy for what's changing and having your own spreadsheets to manage it. And then finally, you can work with a company like Brico, where we'll do all of this work for you, keep track of everything that's changing, talk to the regulators, figure out what's coming ahead of time versus when it's published, and just keep you updated on like what you should be preparing for. And then you won't have to manage like, things in spreadsheet manually and things like that. It's all part of the platform that you can just do something simply. And every time you log in, every time there's a change, you get a notification. So it's a lot faster to do it this way, but there are different approaches to this problem.
Okay, so internal, people-based internal, people-based external, or software and systems. Okay, very helpful.
Great. And Rachel, like, we've talked a lot about like, MTL maintenance and things like that. I somehow feel that it's very analogous to payment systems. So yes. How do teams and customers that you work with optimize their payment systems and processes as they grow and scale?
Yeah, I mean, the answer is basically the same answer for you. It's either an internal team building and maintaining a system, an external team, or a system like Modern Treasury. The external team is very rare because we're talking about big internal engineering organizations, but it's out there. So mostly organizations do it themselves, or they work with a system like Modern Treasury, that provides core high-level infrastructure for this type of payment system and payment product. If you think about some of the answers that you just gave, responding to ad hoc inquiries, providing reporting and roll-ups on different cadences to different people at different times with different needs, that is all downstream of really incredible high-performance real-time ledgering infrastructure. I mean, if you're moving money all over the place, you sort of need 2 things. You need the system that moves the money itself and tracks that the money was moved and it reconciled to where it was supposed to go. That's one half of the equation, moving the money around. And we help a lot of organizations do that, or you could work with an external system to do that. And then you also need to keep track of all the balances and transactions that happened at an extremely fine-grained real-time level. And I know you're nodding from the experience of having built ledgers yourself. It is no small feat. We help companies do one or both, depending on what the organization is doing. So I would say, like, when you're looking downstream at all of the things that you, Snigdha, have described, the processes and systems, documentation, reporting, and then the landscape beyond that in MTLs, what it comes down to inside the company is excellent purpose-built infrastructure that is very good at delivering things that are really hard, like real-time transaction reporting and real-time roll-ups. That's a very hard engineering puzzle. So that's what Modern Treasury does in the market. There's other players, and of course you can, there are organizations that do it themselves. But for folks that are on the call today, like listening to the masterclass, we've talked a lot about sort of the process and operations and reporting. And I think now we're talking about product and engineering's piece of that and what the decisions they have to make so companies can go step into the flow funds or pursue these opportunities themselves. Yeah, it's a fluid environment. And in any type of fluid and operating environment, you need really, really strong operating systems underneath, infrastructure systems underneath.
And it's so relevant right now, like with everything going on with Synapse and like, companies that are enthralled in that whole thing, like not having your ledgers right and that whole movement of money and where it has really gone is kind of business critical.
No kidding. And it's funny, our best buyers are always people who've done it themselves once before and say to themselves, I'll never do it again. Because setting out, it seems like a much smaller size engineering problem than it turns out to be. And a lot of our, prized customers are folks who build unbelievable ledgers at Fortune 100 companies and then say, even with all the resources in the world, building, managing, and dedicating resources to maintaining the system in-house is very hard. So it's akin to lots of infrastructure stories where a dedicated system can do a better job enforcing things that need to be enforced. So yeah, it's really hard to keep a ledger up to date, accurate, and idempotent in a highly scaled operational environment. And so that's like the hard engineering problem that underpins then doing all the roll-ups and reporting that you're talking about, sort of operationally getting that information out inside the company and then out to regulators who need it, so you can do this work, keep doing this work in a licensed way. Mm-hmm. All right, I'm going to ask the question that I'm sure everyone wants to know, but probably shouldn't be asked. What goes wrong when it goes wrong? Like, what's the cost of non-compliance? What is it? What's the thumbs down version of doing this wrong?
Yeah, I mean, it's a whole spectrum. Like, on one side of the spectrum is disruption to your business, so you can't operate for some time. And then the other side of the spectrum is like people getting jail time. So, and there's obviously things in between that can happen, but even a disruption of your business where you have revenue coming from certain states, and because you did not comply to what you were supposed to, now you cannot do that for those states until you fix it. So it has like real money and dollar value losses to the company. And then the disruption also means that the team is distracted. They're not working on the most important thing for the company. They are kind of just using this fire, that stuff. Like even at the lower end of the spectrum, it's pretty high cost of non-compliance. And then the higher end of the spectrum is like, people have obviously heard about cases where companies have been like charged with being an unlicensed money transmitter in states. So like FTX was an example. It was charged with that. And then individuals are also responsible for maintaining the program. So in the past, like compliance officers have been given fines and sometimes jail terms for like not doing what they were supposed to do. So it's a very like expensive way to mess up, and you can be on any side of the spectrum. In between, you'll have some fines of like millions of dollars, but it's not like a small cost of non-compliance. It's a pretty big deal.
Yeah, that's okay. So there's a big stick out there. There's a big carrot for doing this work and growing your company and growing revenue, but there's also a big stick to doing it wrong. Mm-hmm. While we're in this like zone and thinking about risk and downside, what are the parts of this whole beginning to end compliance and licensing process that are overly manual? I mean, obviously you believe the technology and automation is going to help. That's why you started the company. But when you were doing it yourself, I'm just curious to hear, like, from the front lines, what is this overly manual world and what happens out there?
Yeah, I mean, everything right now is in spreadsheets, sticky notes, document drives. It's really, really manual. And we just talked about the cost of non-compliance. Like having things be manual is like a very easy way to be non-compliant because you can just miss things. And like, it's not anyone's fault. It's just some spreadsheet didn't capture the new information and you lost a document that you had, which was giving you permission to do something. And like stuff like that is very rampant. So it's like innocent mistake. It's not even willful malice that's leading to people being non-compliant because of like the state of the world we live in, which is manual. And in terms of like, what's manual? Well, everything is. Like, It's like getting the requirements, what you need to do to be a money transmission company, and then also what you need to do to maintain those licenses. It's all manual. People do the research and put it in Excel sheets, and then kind of manage it by assigning tasks to people internally, and do it through emails and hey, please give me this information, and keep chasing people. Sometimes find someone in the office and be like, can you sign this document because you haven't responded to me for weeks.
Yeah.
That's kind of and one of the companies, it's a large scale company, told us that during the annual renewal seasons, they actually use sticky notes in their office to be what's to do, what's done, what is in progress, which is the absolute worst. I'm what happens if a sticky note just falls off and someone sweeps it over and now you don't have it? So it's a pretty insane process right now, given how costly the cost of non-compliance is. And
Yeah.
I'll give you a story of my previous life. So when I was we were exploring MTLs, and we got a quote of $1.5 million from a law firm, and I was like, well, what will you be doing versus what will I be doing?
Yeah.
And they were like, 60% of it you'll be doing it on your own, and we'll just shepherd you through the process and help you fill forms and state regulator information and things like that. I was like, wait, so that's just admin stuff that you're doing.
Yeah.
There has to be a better way of doing this. So then I was like, maybe I should speak to other compliance professionals who have done this, so we'll know better how to do this. And there was this cross-border payment company, head of compliance who I spoke to, and he's like, this is the worst thing I've ever done in my life. I secretly wish that I get fired from my job so I never have to do this MTL maintenance ever again. And that's kind of what got me thinking of if the pain is so high that people are secretly wishing to get fired, someone needs to be solving this problem and fixing it and making things better. Because a lot of the companies that have had licenses for many years, and information is siloed. If someone leaves the company, that information goes with them. There's no one source of truth. When there's an audit, everyone scrambles to get everything together. And then also if something changes, you are manually changing everything internally. And I was actually shocked by this one thing where very sensitive control person data, because you have to submit that with your application, lying around unencrypted in people's drives, because the CEO will give exactly, the CEO will give the information to the compliance person. They'll download it on their computer, and then they'll upload it at whatever state regulator website, and it's just all unencrypted. It's there for anyone to get into it. So stuff like that is also manual, which is pretty risky to people who are involved in the application process too.
Yeah. Oh, sounds a lot like what we see on our side.
Very, very similar, I think.
Yeah. I mean, I think in payments we see a lot of workflow that's happening over Slack and email and tapping people on the shoulder. And you're telling stories of sticky notes. We've seen stories of payments and reconciliation teams doing it by yelling, they all have to be in the office for certain hours and they yell at each other desk to desk. I mean, it just doesn't seem like 2025, the way payments are managed, the open secrets of what payment operations is really like inside organizations. Even the most technology forward payments organizations, some part of it is running this way. So there's just so much out there in terms of workflow that could be brought into software and systems, can be automated. I think two things that you didn't hit on, I mean, so much of what we see rhymes with what you just described, so I won't repeat it. But two things to hit on as you bring these processes into software and into workflow. It makes things auditable. Also, you can pass it down. These are two sides of the same coin. But who did what at what time is actually very important when you're if you're managing billions of dollars of money movement, or the licensing to support billions of dollars of money movement. It's good to know what happened with every dollar and cent at any time. So making things auditable, and therefore there's probably a word for this, but pass downable as teams change. And the second is moving into standardized data sets. So there's a huge unlock in getting out of siloed systems drives, half an Excel this and a bank portal that, et cetera, across the processor. There's a huge value of just getting it into a single system for its own data's sake. And what you can understand about your business, offer as a business, and how much more efficient you can operate in that environment. So even with automation or in a future AI world where there's a human in a loop and a human managing all this workflow, we're talking about both sets of workflow, payments management workflow and licensing management workflow. There's this like underpinning of moving into software that's so valuable for the organizations that do it and make them much more efficient and able to scale and much more resilient, both of which are really important. I mean, look at what's happened in the payments and licensing environment in the last 5 years or in the last 100 days. I mean, there's a lot to be said for resilience and being robust. So
yeah, and you hit those points very correctly, because I actually see both so similar to each other, because I've dealt with ledgers in my previous roles, and also licensing here is like, this not having that whole audited flow, but also not knowing what is your source of truth. Like, I think the source of truth is kind of, for me, it used to give me nightmares in my previous role. Like, wait, like, do we have this money or do we not have this money? How much money do we really have? That stuff is like, things that would like make me get up at night and be like, what happens if we don't have this money that we're saying we do, but the ledgers are supposed to handle it. But similar licensing, which is like, do I have the source of truth? Like, if someone asks me why I did something this certain way and who initiated this change, having that whole track record of when it happened, how it happened, and like having that in a very searchable manner, and not having to like figure out whose drive it's going to be on and whose email it's going to be on, is like a pretty big like lift in itself. And you can reduce that through automation. Like, we're talking, like, this whole world is talking about Gen AI and things like that. I think, like, with the industries, Rachel, you and I deal with, we actually have to move them to software first and then AI. From shouting at each other in the office and doing things by sticky notes to like doing things in a more scalable manner. And then, like, the AI part will obviously be very, very like relevant as we go from here too, because there is human in the loop element for both payment operations right now and for us. But in the future, like, there could be a place where that human in the loop also reduces as we kind of add more technology on top of it.
Yeah, over time. I know there's so much opportunity here. Okay, I'm noticing time. We promised a long Q&A session, but I think that was a really good 101 foundation. Thank you for the very detailed answers on what it takes to get started and then what it takes to maintain and manage at scale. So this will probably feel a little popcorn across some of the things we've touched on, but I want to answer. We've got some really good questions live that I can see, and one question I wanted to ask you that's my question to you. So I'm going to cut the line and ask my question to you first. I'll go to these. I actually see 3 really good questions already. How do instant payments and changing rails put pressure on this licensing workflow and strain? And we see the pressure in payments, so maybe I'll follow your answer. But in the licensing and workflow, just describe what that means. What does RTP mean? What does FedNow mean? What does the stablecoin environment mean? All these real-time rails that are coming to life right now.
Yeah. And interestingly, I think we were, when I was in my previous company, we were the first ones to build RTP with Chase as like, a company. And it was, I think, some of the stuff that is common across payment companies. So there's risk that increases, fraud risk increases, AML risk increases, because you are actually just sending money out, and once it's sent out, like, it's gone. Like, with ACH, you have days. Yeah, like with any other form, ACH, you have 2 or 3 days to recoup it. Or with wires, you have like additional sources of like, confirming and getting on calls. And especially if it's like a large wire, you kind of do extra steps over there. But real-time payment is like, once it's out of the bag, it's out of the bag. There is like nothing doing over there. And that is actually, that the speed brings risk to the overall system of maintaining everything in a very, very crisp manner. Specifically for licensing, it has impact on your AML controls. So, your anti-money laundering, knowing what transactions have left, what transactions are coming in, having like a robust system to manage that in real time, because now you don't have the luxury of like reviewing those transactions for like 1 to 2 days before they actually get posted. You have to do it instantly. So that puts pressure on the overall transaction system. And then, like, real-time payments also kind of put a lot of pressure on fraud, because the first party fraud, third party fraud, you have just no way to like recoup that money. That's not specifically licensing related, but something that was like very hard for us in our previous company to like have risk metrics around as to how do you enable fast payment without like getting fraudulent actors in the place. But I'm actually curious, Rachel, like how do you think from a payment operation perspective, like at Modern Treasury, how are you all preparing for this faster payment rails coming in?
Yeah, we actually support a lot of companies going through that transition and operating at that scale. It puts a lot of pressure on process and infrastructure. So whereas you had the luxury of batch processes or things going out tonight and you check on them tomorrow, if it's 24/7, 365, you have to be running, payments have to be running, ledgered and reconned in real time. And the only way to do things in real time is to do them with computers. So it puts a lot of pressure on the internal systems and workflow of a company. That's a great impetus to move into software and use the team that was running batch to do the more strategic work of, for example, considering new products or supporting the back office as you go into these new product lines. So they sort of go hand in hand, updating the systems, the scale, the process, and even the licensing, and pursuing new opportunity with the team and structure that you have. So there's the good and the bad of it. Okay, I see two questions I'm going to fold into one. So one is, I'm just curious from the front lines if you see MTL requirements changing, more strict or less strict, given what we're hearing about the stablecoin environment or even from DC or conference, if you feel comfortable commenting on the sort of broad environment. And then the related question is maybe at not a smaller scale, but at the state scale, any trends in MTL examinations? Like what have you seen? I don't know if those are related or not, but just curious to hear the trends that are out there right now in the MTL world licensing.
Yeah. So I think I would separate the two because they are slightly different overall and require different answers, but they're related in the way that environment is changing, and regulatory environment is a constantly evolving environment. Yes. And as we all know, like at the federal level, like things might be becoming easier to deal with, but what's that doing is it's making the states a lot more kind of feeling like they need to do more and like enforce more, because that is now becoming their responsibility. Some of the larger states like California, New York, like Washington, like I think they are just becoming more and more stringent when it comes to who they give licenses to, how they regulate consumer protection, and all of those things. Like for example, CFPB is one of the senior directors, is now heading up like New York's like Consumer Protection Bureau stuff. So it's going to be like going from the federal level to the state level, which I think will make things more complicated, because now you have to do this in a fragmented way across all 50 states, and different kind of requirements and different obligations and different like level of what you need to do is required. So it makes it harder than having like a constant federal framework of this is how I need to do consumer protection and this is the disclosures I need to have. So from a money transmission perspective, the other thing that's changing is like crypto. Right, like at the federal level, crypto is still being debated as like, is it going to be its own thing? Is it going to be like a different like payment infrastructure? But at the state level, the answer actually has been very mixed, and it's still being figured out. So, for example, the bigger states are rolling out their own particular license for crypto. So New York already has BIT license. California is coming up with like DFAL, which is like digital financial asset law, which will have like a separate license next year for crypto companies. Smaller states are also like Louisiana has its own virtual currency kind of licenses, but then some states are like, we don't even regulate crypto. So it's a little bit like all over the spectrum. Yeah. And you have to just piece together like doing that in a very fragmented manner versus everyone having like a clear definition of like, for MTLs, like non-crypto stuff, it's very clear that if you are moving, storing, touching money in any form and you're a fiat kind of rail, you are kind of regulated, but it's still under purview for crypto.
And are you seeing in the fiat world for the, take crypto and stablecoins, that very dynamic environment out of it, any trends in the examinations, uniformity, or I don't know, up, down, sideways? What are you seeing out there?
Yeah. I think unified examinations are definitely picking up. And it can be debated whether it's overall good for the company or not good for the company. But a good example to use for unified example is like the multi-year, multi-state exam that California did with Colorado, Kentucky, Massachusetts, New Mexico, and like Washington and a few other states. Now, if a bunch of different states do it, even if they were not looking at something, if that was not a high priority for them, now if they do it all together, the smaller states will also start caring about those things that they didn't care about in the past. At the same time, like, some states will still be more concerned about certain things and certain areas. Like, for example, Pennsylvania, like, really cares about whether your advertisements are marketing compliant or not. Now, not all states in the past cared about it, but if it's all happening together, then states will be like, yeah, we also care about it, right? So the whole concept of this network supervision is very good. Like, I think overall it's like good for the economy, good for the regulators, more efficient. But the goal with the network supervision is to have a consistent regulatory framework and to reduce the regulatory burden. But it also means that new scope and areas of overlap will be shown when multiple examiners compare reports, and that could be good or bad for the company, depending on how they're looking at it.
Yeah, fascinating. Another one I know not very much about that we just got a question about, which is, tell us a little bit about international, if that touches this world or not, for a US MTL, licensed and underwritten organization. How does it interact with international regimes or international regulatory environments? And then on the other side, for an international company wanting to come to the US and bring their business model or software product and service here, do they look at it the same way that we talked about at the beginning of the masterclass, or is anything different?
Mm-hmm. So I'll answer the second question first because it's a clearer answer. If you're an international and trying to set your sites in the US, I mean, there are some additional steps that you'll have to take. It's like you need to have some people based out of the US, your science person needs to be in the US and things like that. And then also you need to have a company registered in the US and then get registered in each other states that you have to get your license in. But after that, the requirements are pretty much the same. There are some nuances, like if you're international, you may not have an SSN. So there are different ways in which you can kind of go through that. But overall, I would say 90% of the process is the same, as long as you have presence in the US, and then also some workarounds around how do you do your fingerprinting and what happens when you don't have an SSN. Those are some of the nuances. I would say though that the scrutiny is higher if the team is not that great on paper in the US. So overall, I mean, that's true for almost everyone, but for internationals, that's why I'm making sure they're working with reputed companies and have a strong leader based in the US. That stuff is important from just reputation perspective too.
Okay.
And then going back to your question about how do the international kind of licensing regime interact with US is very clear about how it works. The MTLs and the laws only apply to you if the sender of the money is in the US. And when the money is going out, it's less of anyone's US is concerned when it goes out. However, there are some other countries that care about it. So we've had customers who have told us that they are based in Singapore or they're based in Lithuania, and their partner banks in those countries need them to have some MTLs in the US for them to feel comfortable that these companies are doing the right thing. So it's more from the other side that we are hearing those stories versus in the US, and that's what we are seeing right now.
Fascinating. I could ask you a lot about that because that's an area of learning for me, but we're actually at time. I think you can tell that Snigdha and I could probably talk for another hour about automating and moving these workflows into software. I already see questions we didn't get to about certain questions on B2B and where licensing follows and what the ledger requirements are for shared and commingled underwritten accounts. So I promise to follow up. Our teams will follow up on any questions we didn't get to today or anything that gets asked over email. And again, we're going to send this out so you can share it with your teams internally. And yeah, Snigdha and I are here to answer anything that comes up. And thank you for spending time with us in this masterclass. I hope we got detailed and nitty gritty enough for you. And thanks for joining. Happy to have you. Bye, everyone.
Bye. Thank you, everyone.